how to buy NVIDIA stock for $0. Master the free ride strategy that lets you control premium stocks without tying up capital. I guess technically it's how to participate in the upside for $0 because we're not buying stock, but it's close enough. The problem with traditional stock buying, it's capital intensive. Premium stocks like NVIDIA and Microsoft command high prices, requiring substantial upfront investment. A single share of NVIDIA can cost hundreds of dollars, making it difficult to build meaningful positions. Opportunity cost. Traditional buy and hold locks up your entire capital in one position. Most retail traders run out of available cash before they can diversify or capitalize on other opportunities, like we've recently seen with Microsoft, where in 2025 it was trading at around $400 and then it shot up all the way to about $580, and then in early 2026 it fell to about $390. So buy and hold does work, but oftentimes you're riding the stock all the way up and then all the way down as well. A similar situation happened in Palantir, where Palantir in early 2026 fell all the way down to about $130. The solution: enter structural trading. And again, the structure of your trades can be used with any underlying. This is why it's so important to learn strategy, because if you learn how to structure your trades, you can apply it to any underlying asset. You get control without ownership, capture the upside potential without buying shares outright, zero net cost, structure trades that pay for themselves through premium collection. The 1-1-2 call spread, a systematic approach to building free ride positions in quality stocks. This institutional strategy allows you to participate in stock appreciation while minimizing upfront capital requirements. Instead of paying retail prices, you'll engineer positions that finance themselves. Step 1. Choose your target wisely. Don't gamble. Core asset selection. Focus exclusively on established, institutional-grade companies like NVIDIA, Microsoft, Apple, etc. These are businesses with proven track records and strong fundamentals. Avoid the traps. Never apply this strategy to meme stocks, penny stocks, or speculative plays. You need companies with staying power, businesses that will exist and thrive a decade from now. The foundation of any successful option strategy is choosing quality underlying assets. Volatility and hype don't replace fundamental strength. Step 2. Buy the upside, the call debit spread. Structure your position. Purchase a call debit spread to define your upside participation. For example, if NVIDIA currently trades at $170, you can buy the 175 call, the higher delta closer to the money, and sell the 180 call. This caps your maximum profit. This spread costs money up front, typically around $2 per contract. So you're getting $500 of potential upside, but you're only paying around $200 to $300 for that $500 potential upside. Your max profit is the width of the spread minus the debit paid. This creates a defined risk position with capped upside. Now we need to eliminate that upfront cost. Step 3. The financing leg. Selling puts. Or you can also sell calls if you want to. But in this example, we're going to sell puts. Generate premium. Sell 2x naked puts below the current price to collect income. You can also sell 1x when volatility is high. Strategic strike selection. Choose strikes where you'd happily own shares at a discount. Short duration. Target 7 to 21 days to expiration for maximum time decay. Example: sell 2 145 puts expiring next week for $1 each. Total premium collected $2. This is where someone else pays for your call spread. The essence of the free ride. The magic math: zero net cost. $2 for the call spread cost. Your upside participation requires $2 per contract. $2 put premium collected. Selling 2 puts generates $2 in immediate income. Therefore, your net investment is zero. Your total out-of-pocket cost to establish the position. Infinite ROI potential. Infinite return on invested capital. If stock rallies, you've engineered a position where your upside participation costs nothing. If the stock moves higher, your percentage returns are mathematically infinite because you invested $0. 2 paths to profit. Scenario A, the rally. NVIDIA climbs to 180. Your call spread reaches maximum value, $5 or $500 for every one lot. Your puts expire worthless. You keep the entire premium. If it dips, NVIDIA drops to 144, you're assigned 200 shares at 145 per share, which is your strike price. Your call spread expires worthless. This results in you owning the stock you wanted at a discount to where it was trading at previously. Both scenarios are designed outcomes. This isn't gambling. It's structured positioning where you win either way. Critical rule. You have to master the duration game. You keep your puts short-dated. Target 7 to 21 days maximum expiration. Maximize time decay. Short duration options decay faster, letting you collect premium more frequently and adjust positions quickly. Maintain flexibility. Weekly or bi-weekly expirations allow you to adapt to market conditions and roll positions efficiently. Do not sell puts months in advance. Short duration equals faster money and better risk management. You don't want to be short naked puts that expire in 5 months when VIX is trading at 15, only to then watch VIX spike up to 35 because those long-dated naked puts are going to explode in value and show you a major loss. That's why you want to keep your DTE relatively small, 1 to 3 weeks, and also reduce the amount of naked puts that you have outstanding. So watch your size and don't get too greedy. Your free ride action plan. Stop overpaying. Never buy premium stocks at retail price when you can structure zero-cost positions using options. Think institutionally. Use the 112 call spread to engineer free rides on quality core assets like NVIDIA, Microsoft, and Apple. Master the process. Buy call spreads for upside, sell short-dated puts for financing, and profit whether stocks rise or fall. Ready to trade like the institutions? Subscribe for more advanced strategies that give retail traders institutional-grade tools. The market doesn't have to be expensive when you know how to structure positions intelligently. Visit BestStockStrategy.com and subscribe. Learn more strategies and receive $400 of free training.